How we doing? Today is Saturday, May the 20th, 2023. Just continuing our series on real estate notes and seller financing. This week, we're actually going to take a look at a property and kind of show you what we do or what we look to do in structuring these deals. We are just becoming the bank. We are not living in the property. We don't have any responsibility for the property. By becoming the bank, you're just receiving payments, monthly payments for, however long you structure it, usually structured for 30 years. And you just collect payments over that time. And then there's other things that you can do within that 30-year period, but we won't get into that this week. So we just wanted to kind of bring a potential deal that's out there that we're considering. If you're someone that is looking to invest and possibly have the capital to do that, or you and a couple of people, definitely would want to talk to you and, see if we could potentially work together. But we just wanted to kind of show you the structure, of these deals and what can be done. And it's not necessarily here in New Jersey where I am. We look across the country at opportunities, and these opportunities are out there in different markets. And you can't really be afraid of that if you're into seller financing and real estate notes. You don't necessarily have to have a property that's in your backyard. The reason being is because you don't have responsibility for the property. You don't have to fix the toilet. You don't have to fix the window if it breaks. If there's a hole in the wall, roof leaking, you do not have any of those responsibilities when you are the bank. Think about your own situation. If you've owned a home before, when you had a situation, something went wrong in the property, you didn't call your bank and say, can you help me with this or anything like that. It was up to you to fix the issue in the property. And that's what, that's the benefit, or one of the benefits of being a note investor, or you're creating seller financing for others. So what I'm going to do is share my screen and bring up this particular property here. Let's see, where is it? I think it is. Oh, here it is. So this is the property. It's in Midland, Texas. Here's a picture of the property. Obviously, it looks like, it could use, some work, but really not a lot of work. That's just a bunch of stuff that's just in front of the property that can kind of be moved and cleaned up. Here is the description. Property is 1,800 square feet, 4 bedrooms, 2 bath. Has a after repaired value of $250,000. And here are the comps. There's one for 238, and then there's another one here for about 163,000. Obviously, the second one probably was a property that someone bought to fix up, to sell. And this other one here is one that is more, closer to market value. So here are the numbers. They're asking 140K. It needs about $20,000 worth of rehab, and they're saying it's worth about 240. So, we always try to be conservative. So maybe it's not worth they're saying it's worth 250. So maybe it's not worth exactly 250. Maybe we'll go with the 238 and we'll just round it up to 240, let's say. Probably, in the ballpark there at that number. I mean, it could be a little bit less, and then obviously it could go up to about 250,000. So, we feel pretty confident that at 240, we can get that particular value if we needed to. And here are some of the pictures. So, the house looks pretty decent on the inside. There is one issue that you'll see in a second. It's just stuff. in the house. People, just have clothes and things like that, just hanging around in the property for whatever reason. So, but overall, it looks pretty solid. And there's the one issue that, you have here. This looks like it is a bathroom that needs to be repaired. But in this instance, because of what we're going to do and, how we structure this, we're going to leave that up to the person that's going to live in the property. So we're not probably going to, well, we're definitely not going to sell this property to someone with seller financing or create a note with somebody for seller financing at the $250,000 due to the repair that's needed. So somebody going into the property, we're giving them a certain amount of discount because we know that that needs to be fixed. So, they can take their money instead of, paying us or paying full retail price for it. They could take that money and then, fix the bathroom. A bathroom may cost you, $5,000, maybe $7,000. If you get a really nice bathroom, probably up to $10,000. But a good bathroom will cost you maybe about $5,000 to $7,000, and that's putting everything in new with construction, labor, and all of that. So with this particular property, the way that we would structure in here, and we have like this little calculator or system that we use. We would want to offer about 130,000 for this property, and then sell it to someone, as you can see the sale price here, at 220,000. So again, that's about, let's just say, at least $20,000, $15,000 to $20,000 off of what the market value is. So that money again could be used for the person to fix up the bathroom, so to speak. So we're not offering the property at the top of the market because we know about that issue. So what we would do in this is try to get at least $18,000 down. A lot of times, people have this money, they've saved up, they've been wanting to buy a house, they have this money that they can put down. So that's probably the minimum we would look to take down on this particular property in order for it to work. And then what we do over here, I'm not going to go through all of that stuff, but this is probably the main thing that you want to look at here. What we do is we look to structure a first and a second. So in this one, the first loan would be $158,400, and then the second one would be $43,600. And why we do that is because a lot of times, and like I said, if somebody wanted to get in on this deal, what we would do is borrow the $130,000 to take down the property, to purchase the property. But we want to write this first note in a way where we could sell it to pay off our debt. We can get this money from a private lender, hard money lender, someone with an IRA. That's why I said if somebody wants to, get involved, if you are someone or you and someone that's been working at a job, you each have maybe $65,000 saved up in an IRA, you can come together. You could fund this deal. And what we're offering is to pay you, just under 13% return on that money. And we really only need it for most likely less than 6 months, probably somewhere between 90 days to 100, 90 to 180 days. It's most likely going to be closer to the 90 days. So who wouldn't want to make, almost 13% on their investment, their $130,000 investment in 90 days? You do that 4 times a year, that money grows significantly year to year. So, that's what we will be looking for and we will be offering. But we write this again for $158,400 on the first, because we need to sell it. And anytime you sell a note, 9 times out of 10, 9.5 times out of 10, you're going to sell it at a discount. Very rarely can you create a note and sell it for the face value of it, or what they call par. So we know we're going to have to sell it. So we're already understand that. So we know that we could sell this most likely for $139,000, almost $139,400. We could sell it. By selling it, now we're selling it to somebody else who is then going to start to collect those payments. They're going to give us this $139,392, and we're going to pay off our outstanding debt that we borrowed. And that's where, if you're an investor or somebody with an IRA or some type of funds, or if you're a lender, you get paid off in a short period of time. And then what we like to do is keep this second lien here of $43,600, which is paying almost $400 a month. We like to keep that for ourselves as cash flow. If you are somebody that wants to fund this deal, we could, essentially we could offer you that second position as well. So you get paid back for your first, and then you continue to collect the monthly payments on the second from now until whenever the property is sold, refinance, or whatever the case may be. So that is what, we look to do. And by doing it, now that we've structured this first in a way where we can get our debt paid off, we're essentially in the property for nothing. And, the homeowner is living in the property. They're going to fix up that bathroom. They're going to take care of that property. Whenever they decide to possibly refinance or sell the property, that's up to them. But, this $43,600 is written for 30 years. So we could collect this for 30 years. And then what you could also do, if you're holding that second lien, you could actually sell a partial of it. I don't want to get too deep into the woods, so to speak, but you could sell a certain portion of those 360 payments that you're being paid on. You could sell that for a lump sum now and still own future payments. But let's just say you're happy with collecting $400 a month and not having to do anything. You just collect the payment. Now, if something happens on this particular property, something goes wrong, you don't have any debt, and you can still work with the first lien holder who bought the first note that we created, that bought this $158,000 first lien for this 140. If something goes wrong, they're in a good position. They paid almost $40,000 for a house that's worth $230. You don't think that they could sell it in a week for $140,000, especially after the person lived in the property and fixed up that bathroom? So it's probably going to be worth more than what we originally, the original sale price of the $220,000 is probably going to be worth closer to $230, $240, possibly even $250 at that particular time. But person's only in it for about $140,000. So if something goes wrong, they're protected because they could get rid of it. And then obviously there's a certain amount that you're owed as well. And that money would come to you as well. If it does get sold. So, you're really kind of, you're extremely protected in this deal. If somebody is going to give us 18 to 20, 25,000, we could get up to maybe like $21,000 as a down payment. Do you think they're going to default within the first 6 months and within the first year? Now, that's despite if something significant happens, some life event that happens where they possibly could, wind up not paying, but, there's nothing that you can do about that anyway. If something serious happened, something drastic happened in their life change. But if they've got that much money that they put into this property, I doubt very seriously that they're just going to walk away from the property. And even if something did happen in their life, what you can do, because you're the bank, is you can restructure these terms. The person that's in the first position can do that. They can then talk to you about, hey, what do you want to do with this second lien? Maybe we can go down from $400 a month to $300 a month. And then anything that's still owed is tacked on to the end of either that first or second lien, whatever is owed. So it's not like you lose the money. It's not like the money just goes away because they don't pay or anything like that. It's still there. You just move it around to kind of get them back on track, to help them, whatever their situation is, but you're still going to be collecting a monthly payment. And then if that doesn't work, or if we can't come to some agreement about restructuring it, you're still in a good position if the property, does get sold the first, gets what they're going to get, and then you will get something, as a second lien holder. But the chances are of things going south um, very early on in this deal is probably not going to happen. So, and then, again, you and the first lien holder, you guys can have discussions, you can work together and possibly take the property back and then redo this, do it again. Maybe you bring in another partner to pay off whatever is owed on the first, and then you can restructure this again with somebody else. So there's a lot of exit strategies that you could do to protect yourself, but the likelihood of somebody putting down $20,000 and then just walking away from the property is most likely pretty low, especially when the property is worth what it's worth. So if they do get in trouble, they could most likely just sell it. Maybe they don't, get any of the equity that they had in the property, but they can at least sell it, get everybody paid off, and move on. So you're extremely protected in this particular deal. So that's how we structure it, the first and the second. And then what we like to do is get our first paid off. Anybody who loaned us money or gave us money to do a deal, they're happy. They've made 12% within 90 days or less, most likely. And then, we keep that second lien as cash flow. And how many of these second liens do you need at $400? Let's just say you do, you get 5 in a year. 400 and times 5, that's $2,000 a month. That's just coming to you. That you may be in a position to leave your job making, that type of money, and then, go do something else, just depending on where you are. Maybe not, I don't know. But let's just say you have 5 or 10 of these, how does that change your life? And these types of deals are out there. And like I said, we can't, I wouldn't let the fact that it is in the that it is in another state, get you to where you don't, get you to a point where you wouldn't want to invest in it. Because again, you're not responsible for anything on the property. You're just collecting payments. The only time you would probably have to get involved is if the person stopped paying, and then you have local people in the area that can assist in any type of foreclosure, or, anything that you might need, you can coordinate with somebody in that particular area to take care of. So this is what banks do. This is why banks make the type of money that they make. They're, giving out loans, and they're collecting interest on those loans and creating cash flow. So that's what, these are types of things that are out there right now. And then what's going to happen too is that a lot of people who had low interest rates who were given low interest rates, when COVID happened, if these people have issues and need to make adjustments and need to go to another place, or life happens to them, what you can do is take over their existing mortgages and do the same thing with the buyer. It's just what they call a wrap. Seller financed wrap. Maybe we'll talk about that one next week. But you can get this debt 2, 3, 4%. A lot of people were getting mortgages written at 2, 3, 4% for 30 years. You can take that over and then put somebody else in there, create a note, maybe, for obviously a higher interest, and you can just make the cash flow between what you're charging that person, the new person to move into the property, and what is still owed and outstanding on the property and what that bank owns. You're just in the middle collecting cash flow. So these are types of deals that are out there, going to be out there as this market changes, as things happen. You can, take advantage of this opportunity. The other opportunity is buying notes that are already created. They're going to be people that, need to sell those to get ready for what is happening and the things that will happen. Some of them are looking for cash now so they can go and do other investments. A lot of commercial real estate is probably going through a tough time right now, and going to be going through a tough time, and people may want to take advantage of those opportunities. So they have these notes and they want to sell them. You can position yourself to be in that mix to purchase them. And you can do, like I mentioned earlier, partial. If you're somebody that doesn't have $130,000, or you and somebody else can't raise that amount of money, there are opportunities out there for less money, where you can buy a certain amount of payments. I received something where you could put down $5,000 and make just about 11% return over 13 months. You purchase this for $5,000. You collect payments over the next 13 months, and you've gotten your whole $5,000 back plus an 11% return, whatever that is. I think it's like, $400. So, and that's beating inflation. I don't know what, you're investing in now. Are you getting double-digit returns currently? I don't know. But if you have money that's just sitting around, maybe it's not doing anything, you have an old IRA from another company that you didn't bring over. You just have some investment capital that you're looking to do. These opportunities are out there based on, what I just showed, as well as buying the note directly from someone who created this seller financing. So, with that being said, the opportunities are out there. We're looking, to team up with people, just depending on what it is that you want to do. If you're somebody that's, in another area looking for a property, but you're not qualified for a bank, we can, put you in these situations as well. Just, we just have to talk to you, find out how much down payment you have, where you're looking at, what area. And these are all over the country. This is everywhere. So you can, if you know somebody out of state, in another state, and they're looking, but again, they can't get a bank to give them a loan, seller financing is the way that person can become a homeowner. And then once, they become a homeowner, show that they can make payments, then they can refinance, maybe get a lower interest rate, more of a bank rate at that time, and still own the property. So, this is, a good time to get involved with these two strategies right now. And, this is what we try to do. We try to structure it in a way where if we do borrow any money, we get it paid off. So if you're somebody that wants to fund it, we only need it for a short amount of time, and we keep that cash flow, for ourselves. And that's really what you want to do if you are an investor that's looking for cash flow. You want to get, a few of these, as many of these as you can, to create that monthly cash flow. So I hope that made sense. If you have any questions, please post them to this, and I'll get them answered. If I wasn't clear on anything or something didn't make sense, please let me know. But hopefully it made sense to you, the concept itself, and hopefully it does spark some questions that we could, get answered for you. If you need to reach out to me, my telephone number is 973-475-8488. Or if you want to email me, it's investorgmr@yahoo.com. Just send me an email or send me a text, and let's talk. Let's get your questions answered, and hopefully we can help you or help someone or work with you to help your investment capital grow. Again, 12%. If you can get 12% return on some money that you lend out for a shorter period of time, if you do it once, you're most likely gonna, want to do it again and again and again. And it's for a short amount of time as well. Once we've identified the person that's going to live in the property, it just takes, a short amount of time to get our notes sold. We have buyers of these notes that can spend, over $100,000 or close to $100,000 to pay for the note. Those are already lined up, and we just sell it to them, and then they take over, and then you, as the person that funded the deal, get paid off. All right. So if you have any questions, please reach out, and we'll be here again next week, Saturday, 12:30 Eastern Standard Time. We'll be here, and we'll probably cover the seller finance wrap. We'll look at that and try to explain that a little bit for you. And hopefully that'll make sense for you as well. So everybody have a good week, and we'll talk to you soon.